Hi, this is Ken. Let me start with a simple conclusion. Tesla isn't slowing down right now. It's expanding on three different fronts at the same time: autonomy, demand, and regional strategy. Over the last 24 hours, we've seen three interesting developments. FSD may soon receive approval in Europe. Cybertruck deliveries are being pushed further out because of strong demand. And Tesla has brought back the 7-seat Model Y in Europe. Individually, these look like small headlines, but when you connect them together, they reveal something bigger about where Tesla is heading. So today, I want to walk through these three stories, and more importantly, what they might mean for Tesla investors over the next few years. Let's start with full self-driving. According to comments from Elon Musk, Tesla's FSD system could potentially receive approval in the Netherlands as early as next month. If that happens, it could become the first real entry point for Tesla's autonomy system in Europe. Now, this matters for a very simple reason. Europe has historically been extremely cautious when it comes to autonomous driving technology. In the United States, Tesla has been able to roll out FSD testing broadly. Drivers are using it every day across a wide variety of environments. But in Europe, regulators have been far more conservative. Safety standards, legal frameworks, and liability concerns have slowed down the introduction of advanced driver assistance systems. So when you hear FSD approval in the Netherlands, it's easy to think this is just one country, but that's not really how regulatory momentum works in Europe. Often, when one country allows a technology under a certain framework, other countries begin reviewing similar approvals. The conversation spreads, policy discussions accelerate. In other words, the Netherlands could become a precedent. And if that happens, Tesla's autonomy expansion outside North America could begin to accelerate. At the same time, we're also seeing something interesting happening in the Middle East. Tesla has already started public road testing of FSD in the UAE. So now we have North America, the Middle East, and potentially Europe entering the conversation. This suggests that Tesla's strategy is becoming more global when it comes to autonomy. Now, of course, we need to be realistic here. FSD today is still supervised. Drivers are expected to stay attentive, keep their hands ready, and intervene when necessary. It's not a fully autonomous system yet, but even in its current form, the technology has evolved dramatically over the past few years. Today, the system can navigate urban intersections, respond to traffic lights, perform lane changes, make turns, and operate in fairly complex environments. This is no longer a simple highway driver assistance system. This is a neural network-driven driving model that is learning from real-world data. And that data advantage is one of Tesla's most powerful long-term assets. Recently, we've also seen some fascinating examples of how the system is behaving. In certain situations where another vehicle approaches aggressively from behind, almost like tailgating, the FSD system has been observed moving slightly toward the shoulder of the road and allowing that car to pass. That's interesting because that's not just a mechanical driving action, that's behavioral adaptation. Human drivers do this all the time. If someone is driving aggressively behind you, sometimes the safest move is simply to let them pass. The idea that an AI driving system is beginning to replicate those kinds of social driving behaviors is quite significant. It suggests the neural network is learning not only traffic rules, but also traffic culture. And as Tesla gathers more driving data globally, that neural network becomes stronger, which brings us back to the bigger investment thesis. Autonomy is not just a feature, it's potentially a massive future revenue stream. Now let's shift to the second story, which is Cybertruck. Recently, Tesla introduced a Cybertruck variant priced around $59,990, but shortly after the announcement, something interesting happened. The delivery timeline moved. Originally, the expected deliveries were scheduled for around 2026. Now that estimate has shifted closer to 2027. So we're looking at roughly a 1-year extension. Now, in most industries, longer delivery times could be interpreted negatively, but in the EV market today, that's not necessarily the case. Across the industry, many manufacturers are struggling with slowing demand. We're seeing price cuts, incentives, and inventory growth across multiple brands. But Cybertruck appears to be doing something different. Instead of struggling to sell, the vehicle seems to be generating enough interest to push delivery schedules further out. Now, we should be careful not to jump to conclusions. Part of the delay could simply be production scaling. Tesla is still ramping up Cybertruck manufacturing. New production lines take time to stabilize. But even considering that, pushing delivery timelines outward suggests there is meaningful demand. Cybertruck was initially viewed as a very polarizing product. The design is unconventional. It looks nothing like traditional pickup trucks. Many analysts wondered whether it would be too niche. But what we're seeing so far in North America is quite the opposite. Cybertruck has become one of the most talked about vehicles in the industry. And if Tesla can continue scaling production, this vehicle could become a meaningful contributor to Tesla's revenue mix in the coming years. Now let's talk about the third story, which involves Model Y. Tesla has reintroduced the 7-seat version of Model Y in Europe. This configuration existed before, but it had disappeared from the lineup for a while. Now it's back. But the interesting part is what's happening in China at the same time. In China, Tesla recently introduced something called the Model YL. This is a slightly larger version of the Model Y with 3 rows and 6 seats, designed to provide more space and comfort. So when we see the 7-seat Model Y returning in Europe, an obvious question comes up. Why didn't Tesla introduce the larger Model YL there? Instead, Tesla is offering a 7-seat configuration in the standard Model Y body. There are a few possible explanations. First, production logistics. The Model YL is currently produced primarily in Shanghai. Factories like Gigafactory Berlin may not yet be configured to build that version. So from a manufacturing perspective, it may simply be easier to reintroduce the existing 7-seat configuration. Second, European road environments. Many European cities have narrow streets, tight parking spaces, and dense urban layouts. In those environments, slightly smaller SUVs are often more practical. A compact vehicle that occasionally supports 7 passengers might actually be more appealing than a larger SUV. And third, pricing. If Tesla were to introduce the larger Model YL immediately, the vehicle price would likely increase. In today's EV market, price competitiveness still matters a lot. So Tesla may be choosing a strategy that expands options without significantly raising the price point. This kind of regional adaptation is something Tesla has been doing more frequently in recent years. Instead of pushing identical products everywhere, the company is starting to tailor configurations to specific markets, and that's often a sign of operational maturity. Before we wrap up, let's briefly look at Tesla's stock price. Right now, TSLA is trading around $398, which means it has slipped slightly below the 400 level. But looking at today's broader market environment, major US indices are also down significantly, so this doesn't appear to be driven by Tesla-specific negative news. Earlier this week, I mentioned that Tesla seemed to be trading within a range roughly between $400 and $420. The key question now is whether the stock closes the week clearly below 400. If that happens, short-term momentum could shift slightly. But from a long-term perspective, the bigger picture hasn't really changed. So, if we step back and look at everything together, a pattern begins to emerge. Tesla is expanding FSD beyond North America. Cybertruck demand appears strong enough to extend delivery timelines, and the Model Y lineup is evolving differently depending on the region. This tells us something important. Tesla isn't just building vehicles, it's building a global technology platform that combines AI, manufacturing, and regional market strategy. For long-term investors, that combination matters far more than short-term price movements. The real question isn't whether the stock moves a few dollars this week. The real question is whether Tesla's technological and strategic position continues to strengthen over time. And based on what we're seeing right now, the answer still looks very positive. That's it for today's analysis. If you found this breakdown helpful, please consider subscribing. I post Tesla analysis every day, and my goal is simple: to help you understand where Tesla is heading before the market fully catches up. Thanks for watching, and I'll see you in the next one. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.